Hi, everyone. Welcome to another episode of Housing Houston. I am your co-host, Mariela Aguirre with Terra Residential Services.
And I am also your co-host, Kayla Ewald with First American Title. So we got so many views and so many questions a couple months ago whenever we had this speaker on our podcast. And so we felt as though he needed to come back and give us a little bit of a market update and tell us what has happened since the last time he's been on the podcast. But today, please welcome Ben Sinclair. He is with Highlands Residential Mortgage.
Woo-hoo.
Thank y'all for having me again.
Yeah, how you doing?
I'm doing good. Business is trying to get going here in 2025. So looking forward to having a great year.
We need you to explain that. What do you mean
Yes.
trying to get going? Because I know everybody thought election year, whichever side you were on, you know, the interest rates might get cut, the market might pick up, more buyers, maybe more affordability. But have you seen that happening?
I have not seen more affordability, really. Interest rates, actually, the best rates we had last year were in September. Leading up to the election, they went up. At the beginning of the year, we were like around 7%, you know, for good credit people on a good conventional loan. So affordability really hasn't improved, but I think people are tired of waiting. You know, they're used to, you know, and rates have come down a little since then. I'd say we're running, you know, between 6.5 and 6 3/4 now. But with this new administration, you know, we don't really know if rates are going to come down. I think they're just as likely to go up as they are to come down right now. And I think that, I've seen forecasts for the end of the year anywhere from 6 1/4 to 5 3/4.
Okay.
I kind of think we'll be in the low sixes. But again, it's more about the economy, inflation, unemployment, those things. But I do think that, the people buying houses now are mostly doing it because they have to.
They're tired of waiting, like you said.
They're tired of waiting, and they got a new job and transferred. They expand. They had kids. Their kids went off to college and they downsized. Grandparents moving to town to be closer to their grandkids is probably one of the top 3 reasons I've closed loans the last 6 months. And, you know, historically, 6% rates are not that high.
I was going to say 6 1/4 really isn't a terrible rate if we could end the year.
It's
Now,
not.
I know earlier you said there might be like 4 rate cuts this year, but now everybody's talking about maybe only 2 rate cuts if there are any. So, but 6 1/4, like you said, they're tired of waiting. How long have they been waiting, do you feel like? 2 years?
At least 2 years,
Okay.
maybe even, you know, longer. I mean, the shock of, you know, when they started up from 3, they went up pretty steadily.
Okay, 3?
Yeah.
Sounds insane.
When this downturn started, we were in the 3s, and you know, and everybody's like, oh, they hit 4, wait for them to get back to 3. They hit 5, and I'm going to wait for them to get back to 4. They've hit 6, and they've been here for 18 months plus. So people are just getting acclimated to where we are. And if you need a home, you know, the other side of that is home prices are still going up. Houses are still appreciating.
So do you think they're tired of waiting because of the life changes like you mentioned, or they're tired of waiting because now consumers, you guys, are finally, you know, realizing that they got to get in at this price because the prices are still
Oh, yeah.
I think the cost of waiting is starting to the light bulb's starting to come on with consumers, because, you know, if you buy a house at $300,000 a day at 6 3/4, or you wait till rates get to 5.5, well, that same house is now $375. If you're putting the same percentage down, like say you're putting 5% down, even at 5.5, that higher sales price house is going to have a higher monthly payment. So get in and lock in today's prices. Plus, if you waited that time, you missed out on $75,000 worth of equity.
Yeah.
You know, that you could get closer to maybe dropping your PMI and helping your payment that way, or something, you know, something of that nature. So, if you can afford it, it fits in your budget, and you're ready to go, now is a great time to buy. We're going to get busier. We always do in the summer. More competition, lower inventory equals upward pressure on home prices. And that's just supply and demand. It hasn't changed.
Absolutely. Yeah. Today's prices are not tomorrow's prices. So that's going to change. And yeah, taking advantage of that to do it now, you know, and stop wasting time. Which brings me to an interesting question that I've had recently is, there's curiosity of what type of loan product has been happening recently since new administration came in. FHA, conventional, something else?
I would say conventional still my business is probably 70% conventional.
That's
the rest
good.
FHA, VA, throw in a construction to perm, one-time close. But I think that the most used thing that I haven't used, I've used 1.0 and 2.1 buy downs more than I've ever used them in the past. It gives you, so your rate's 6.5. If you do a 1.0 buy down, it's your payments at 5.5 for the first year. And people are doing that. It gives them some relief, after they had to come out of pocket with a big chunk to close and everything. And they're betting that rates are going to come down some, and they can refinance when they do. And you never lose your buy down. Like if you refinanced, say in 9 months, you had 3 months left of your buy down, you would get what was left to subsidize your payment as a principal reduction. Yeah. Yeah. So it would reduce what you owed, it'd go straight to your payoff. So you're never going to lose the buy down, even if you refied before it was over. So we've been doing a lot of those. It's helped me win some deals, that and closing fast.
Does it have to be conventional to do the buy downs?
No, you can do it. You can do it on government loans as well.
And can you just explain the difference of VA, conventional, FHA, just in a short little sentence for the consumers?
Yeah, FHA, Federal Housing Administration, and VA are quite similar. VA, you have to be a veteran. It's a 0 down loan. It's probably the best deal going.
Oh, yes.
No mortgage insurance. So, and the last time I read a statistic, I think only 13% of eligible veterans utilize their deal. So it's a question on the loan application now. Are you a veteran? Did you serve? What's your status?
Because they don't know what benefits
a lot of
they
them
can
don't
get
know.
from serving.
They'll tell you stories about being processed out. It's like they said sign here and I was gone, and they didn't tell, but we can do all that work for them. We get their certificate of eligibility, their discharge papers, all that. We just log right into the VA portal. FHA, 3.5% down. And VA and FHA both will allow higher debt-to-income ratios. And that's where they have a big advantage over conventional loans. So we can go to 55, 56, 57, sometimes on VAs even into the 60s. With a conventional, when you get up around 47, 48%, you're stuck. You're not going to get an approval. It used to be 28 and 36 when I started a million years ago, so on conventional loans. But now with automated underwriting, so that's the biggest difference. FHA has mortgage insurance for the life of the loan. It does decrease as you pay down the balance. Conventional, it drops off when you reach 20% equity, and you can get that removed before, which I help a lot of clients do.
Okay, good to know.
Yeah. I'm going to speak on behalf of my investor friends, including myself. Because you have a new product that you and I spoke about recently.
Yes, we do.
So give us a little insight on that, on what how that can help investors in building their portfolio.
We have a one-time close for government loans now. So a one-time close is a construction loan and permanent financing all rolled into one loan. So you don't have to go to the bank and get an interim construction loan. And then when that's done, you have to get a regular mortgage from somebody like me. This rolls it all into one. So it cuts down on your closing cost, right? You don't have to close once. If you know what you're doing, you set up the title policy right. It's cheaper, when you get to the end. And we've never had them on FHA loans. So it's just, you appraise the property based on the plans and specs. So the future value, and then you stage fund it as it goes along. The buyer and the builder have to sign off on the draws, so everybody's happy. Because, with construction, it's always fun. And,
right.
That's all I'll say.
Don't tell me that, Ben.
But so you have some control. And they're just great products for people that, especially if you own the land. If you own the lot, a lot of times you can use that equity and not come to closing with zero. Your lot value is enough to get you into the deal without having to come out of pocket. So people who own the land, Mariela, they love those types of deals.
Yes.
Mariela.
Facts. I'm excited. Yes.
I'm
Awesome.
waiting. I'm waiting for my plans and specs.
Yeah. Working in progress. Work in progress.
Yes. You'll have an email after this.
Right.
Yes.
After this meeting, you'll have the
Right.
specs, the
Yes.
plans and specs.
But it's it's like I said, you can feel the energy. The weather's getting better.
Yes, it is.
The rodeo's going on.
Yeehaw.
Chili
Right.
season is over, Kayla.
It's
thank
over.
goodness.
No more chili.
Yeah.
Congratulations.
Yes.
We do a
First
few chili
American.
cook-offs.
First American. Well, actually, the Galveston Association of Realtors had a a chili cook-off, and Ben with Highlands won first place. I think there were seven
contestants. Yeah.
And then First
Those
American
people in
Title.
Galveston can't cook chili. I'm glad it wasn't a gumbo
Okay,
cook-off, you know?
if you're in Galveston, we love you. Do not listen to him. He might not be your lender in Galveston, but we will be your title company and property management company. And then what place did you get at First American Titles?
I don't know, like 5th.
10th, 5th.
First American competition's way harder. You know? But I have won that one in the past, you know.
Yeah, because I think I won, 3rd place or 4th place?
Something like that, yeah. Mariela cooked last year.
Yeah, that's a tough competition.
So anyways, chili season is over, but
and
we
some
are
of us
getting
don't
into...
believe in beans and
we're
chili,
moving
but
into,
whatever. We're not going to get into this discussion, but whatever.
We're not going to get
Home
into
one that
buying
had-
season,
But
right?
yes, the
Right.
market is picking up. Just this week alone, we are seeing the contracts rolling in. So yay, keep
I got
them
one
coming.
on the way over here.
Yay!
Yeah.
That's awesome.
So that's and the guy had transferred from Dallas. So
Okay.
like I said, that's the most I like the house across the street. I'm going to buy it. Buyer is not out there. It's more they have a reason.
Yeah, relocating
yeah.
to be around their family.
Yeah.
Mm-hmm.
And the biggest first time that y'all will find this interesting. I read this studying for our deal today. The number one first time home buyer are women in their 50s.
Wow.
Interesting.
I love that.
And-
Go
and-
women.
and, in honor of International Women's Month. Is it
Yes,
month or
I think
day?
it was
The
yesterday.
history month is
Was it day?
The 8th was, I think, the day. But the whole month.
I'm
is,
calling it the month.
There you go. We
You should
appreciate
call
that.
it every
Yeah.
month.
Every
month.
month for you,
Every
Ben,
month is
should
International
be.
Women's Month.
Ben has a soft spot for moms and
Moms
women.
and daughters.
Yeah,
And sisters.
yeah, and sisters.
Yes.
You've got a good sister
I do.
too.
I have a really good sister. Yeah. Another thing that investors may be interested in, Mariela, is I've also, over the past 4 years, or in 2024, FHA delinquencies were higher than they were in 2007, right? And 2008 is when everything crashed. The difference is the previous administration was bailing out. They bailed out over 500,000 delinquent FHA buyers last year.
Okay.
That's inventory. That's 500,000 homes, right? Now we don't know, I don't know, this is not a comment on the current administration. We don't know what they're going to do, but so far they haven't been real, gung-ho on spending a lot of taxpayer money on stuff. And so if they quit bailing these people out, and, I do feel bad because some people are losing their homes, but that's the way the market works. And that's inventory back into the market. And we need more inventory. Inventory is higher than it has been, but historically it's still way below what it is. And when, and people are moving to Texas, when you have more demand than you have inventory, that's upward pressure on prices. So if we could get some homes in the market, especially, foreclosures tend to be good deals a lot of times, that might kind of stabilize prices a little bit. I don't know. I mean, we may just have enough people here moving here where prices keep going up. But, that is something that could be on the horizon, especially for investors.
Yeah, and I still think that some of them, and just based on conversations that I'm having with people that have had their properties on the market for a really long time, that they're now coming to me, hey, we can't sell this, but I'm losing money and I can't afford 2 mortgages. Now they're coming to me hey, let's rent it out.
Agreed.
But a lot of the times when I go back and research, I can see why it's overpriced. It's typically 8 out of 10. It's a pricing problem as to why it's beginning still in the market. And so I know that they're not trying to budge from that number. And some of them are sitting pretty at 3%, 2.75, so they don't have that too hard of a hit. But I know that's another aspect to think because they're not really pressed on putting it, or decreasing that price. So that's the other factor. But going back to people that are currently buying, from what I've heard, is that underwriting is still very, very picky and finicky. Can you give insight on not necessarily the why, but kind of how that can be, how can we work as people that are buying? How can we work around that?
You need to get out in front of it. You need to get with a good loan officer who is going to dig through all your documentation up front, because a lot of things, once you present them to underwriting, you're sunk, right? Mm-hmm. But a bunch of stuff we can fix before they ever get there. And I would say there's more, like I'm a mortgage banker, closing fund in my own name, but we sell it to an investor, to a Chase or Wells Fargo. Well, those, if we rep and warrant that this is a good file, well, if we mess that up, we have to buy it back. And those investors are tougher. They're scrutinizing the loans harder than they ever had. And some of it's because volume's down and they've got time. You know, when we're throwing, 300 loans a month at them, they're not going through them near as good as they are when we're throwing 50.
Right.
And so I've heard that from my operations people. But underwriting is still, we know what the guidelines are. You just need to get in front of them. For the investors, we're still doing DSCR, the debt service coverage ratio. We're still doing bank statements. Loans, that non-qualified mortgage sector is the fastest growing sector in the mortgage business. And it's not, the cheapest money is FHA, VA, and then conventional. But, it still allows self-employed people who have a lot of write-offs and people like that and properties that cash flow, it allows those people to get into houses with a lot less. Like on a DSCR loan, you get an appraisal with a rent schedule, you verify assets, and that's it. There's no income, there's no employment. All it is assets and the appraisal. That's the whole deal. You pull a credit, they have to have credit score requirements and down payment and stuff, but there's no income, employment, or anything like that listed on those loans.
Are you seeing a lot of bad credit because of the affordability and the economy and people just not being able to keep up? So therefore they put it on credit cards at a 17% interest rate and then...
I'm not seeing bad credit, but I'm seeing a lot of maxed out credit.
Okay.
Which is going to lead us to home equity loans.
Okay.
Either HELOCs or first lien equity loans. Because even if you're, you don't like 7.5% on, say, a home equity loan. Well, if your credit cards are at 18, 21, whatever, somewhere up there, it's still a good deal to consolidate debt that way. I actually think credit as a whole, just from my sample size, is better than it's ever been. Now it's funny because I got one today that was below 500, and I was surprised.
Don't jinx it. You might get 10 more like that. When you get one, you get 10.
I was surprised because I really haven't seen somebody who didn't qualify based on credit. The biggest deal has been like the affordability and debt to income. Because it's not. We got homeowners insurance has probably doubled in the last 3 years or close to it. And as property values go up, so do the taxes. And I actually got a contract. About 2 weeks ago, and the appraisal district, it was in Tomball, I think, had it at 508, and they got the house for 440. So what does that tell you when, and it had been sitting there for a year, just like you said. And it busted on inspection, so I never got an actual appraisal to I didn't get that far, but at
440, you're like, okay, just what do we need to do to fix this inspection and keep going? If you were offering 508, now we're getting it at 440. What can be that bad?
So, So anyway, but that's exactly what you're saying, And they had been renting it, they got tired of renting it. It'd been sitting there, and it, like I said, it busted out on inspections. I don't know why, but they don't tell the loan officer.
I
that.
want to
They just
know
send us-
why.
Right?
I always want to know why.
All right,
And
the
if
next
I-
time we bring you in, you got to give us an
I emailed
update.
the real estate agent. She said, "Yeah, we couldn't work it out." So
Dang.
Oh man, was there something recent something that surprised you throughout this time? That now that it's starting to pick up, is there something, whether it's a type of client or a program or anything that's now you're seeing more frequently that kind of has changed?
I just think the program. I think the business has changed, and the consumers, the buyers, are way better educated. They come to you, they're shopping harder, and they look you up online. Now they still want to talk to you, right? There's no substitute for a 30-minute conversation and all that. But I think a lot of times they find you, they text you, or they email you, and you get an application. You've still never talked to them. You finally have that conversation once you get the application. And I've seen a lot of on the way here, I got a lead from a real estate agent of somebody I talked to in 2018. Wow. Now, he remembered that. I didn't. But I'm seeing a lot of that come out of the woodwork. Like people that came, they didn't like rates a year and a half ago. This guy's way back further than that. But for whatever reason, they didn't buy, well, they're coming back to me. And they're still in my database or my CRM. And so, but just a better educated buyer. Like I told one guy, that I'm doing a buy down for, that we could do a buy down, and then like 2 hours later he calls me back and says, "Well, I can't pay for that, Ken." I said, "No." So they went out and did the research on what I said, and there's just a lot more readily available info. Most of it's good. Sometimes you get some sideways stuff on YouTube, but generally you're dealing with a more educated consumer. And I don't, there's not. I mean, it's an older crowd buying houses. Like the young people are in their mid to late 30s now. It seems like. I hardly have any 20-year-olds, first-time home buyers. You almost have to be a couple, have a partner to have two incomes to get in. Right now, if you're in your 20s, unless you're just, rocking it with a six-figure salary or something.
Yeah, I mean, average sales price in Pearland 77581 and 84 is like 420,
Right.
430,000. That's the
Oh,
average.
wow.
So if you're on one income and in your 20s just starting out,
Right.
out
Got
of
a car
college or
payment
whatever
and-
trade, then you're not getting in.
Yeah.
Got a guy that wants to live in Pearland right now, and he don't want to spend over 300. And it's just,
Good luck.
he can't, We found one that was 320, and then it was a typo. It was actually 405.
No,
no.
that type of
And I think it was like,
I know.
it's almost like a bait and switch. I'm not going to say that,
What?
but
Was
that's
this
what
on
I felt like.
Oh my God.
It was like 4-bedroom, 3-bath in Pearland for
320.
320. I'm like, man, you better check that out with your real estate agent.
I don't know. That doesn't sound like a data entry error. That's
Yeah.
that's a
Doesn't
drag.
it?
I mean,
That's
a
drag.
number, like
yeah,
a,
like
And
it's
the
not close
agent-
to the key.
No.
Like your
Yeah.
numbers are not. Yeah.
The agent said they'd had it on for like 440 about, and taking it off the market for 2 months. So,
okay.
yeah.
Interesting.
Relisted it. So, but anyway, yeah. But it's hard. I mean, and I probably told this story the last time I was on here, but my first house in 1999 was 99.9.
And you still live in it,
I
right?
still have it, yeah.
Imagine how
It's
much
tripled in
equity
value,
is in that
and,
house.
but my payment all in was like $1,150 to start. Okay, and now you can't rent a place for $1,150.
No.
Yeah.
I mean, not where you probably
A
would have-
room from your
Yeah,
parents.
right.
Studio, loft,
so-
not so great part of town.
But right. So it's so that the affordability part has changed. It's still the easiest, quickest way to build wealth is to buy a home, invest in real estate. It's not. It fluctuates, right? It's not static. Some years are better than others, but by and large, I think there's been one 10-year period since like 1942 where you wouldn't have made money. Or 1 year. I've got that slide somewhere, but and we do a lot of. The other thing that we're seeing right now is, a lot of times, and I don't want to knock the builders, but a lot of times escrow analysis are coming out, right? They do those the first of the year, and I've seen shortages upwards of $10,000 in escrow accounts because people, did taxes based on the land value. I recently refinanced a guy. He skipped 2 payments, which for him was about $10,000. And I caught his escrow shortage up because he was going to have to write an $8,000 check. So we just rolled it into the refinance and dropped his rate by 1 3/8. He had like 8 1/4. He bought at the height of I think August of 23. But got him in. I saved him $400 a month on his payment, his principal and interest, but his it was a wash because his taxes went up over $400 a month. But he didn't have to suck all that shortage up into his payment. So I've had several of those inquiries. So we are doing some refinances along with home equity. People consolidating debt mostly. A few home improvement projects.
I like what you said about how you have people coming back from 2018 and maybe some other years. And so my plug from a marketing rep standpoint would be like, make sure you have your sphere up to date. And if you last reached out to them 3 or 4 years ago, really consistently be reaching out to your sphere every single month because like Ben said, they're coming back. And when they come back to buy or sell, you want them to think of you as a real estate agent.
And my most solid leads, referrals are coming from my CRM right now.
There you go.
And calling your past customers is, you already know them.
Yeah, you
It's
already
easy.
know them. It's an easy
The
check-in
easiest
call.
things to do are always the hardest thing to discipline yourself to do. But that's a layup as far as marketing.
Absolutely.
And you just check on them.
Yeah.
And the next thing you know, their brother's girlfriend's sister is buying a house, and you got a client.
Yeah, that's exactly how
that's
it
the way it
works.
goes,
That's
yeah.
exactly. Don't even talk about business. Don't even bring
No,
up
you
business.
never talk
it
about
will
business.
come up,
Yeah.
and then you will get
They
a
know what
deal.
you do. You got them in a house.
Yeah.
Well, the
Yeah.
other thing about what you mentioned about building your sphere is that oftentimes, and I don't know what his situation, your client was, but maybe the client was ready in 2018. Maybe he needed time to save and get a plan and get
Yes.
ducks in a row. But you have your expert always like there with you to guide you better. And so that's another thing, is that if you're not ready today, you might be ready maybe in 3 years to set you up with your credit score getting checked in. How much do you really need for savings, building up the savings account, and then you'll be able to be in a better position. I know we keep saying that, today's prices aren't tomorrow's prices, but you also have to be ready, because you don't want to exhaust your monthly expenses on a home mortgage. But if you can better plan for it, then that you situate yourself a little bit better, and having the guidance of experts, that we have here before you, then that helps that, to build up a plan.
Yeah, we are not encouraging you to be house poor.
Yes.
Do not buy a house and then not be able to afford the furniture.
Exactly.
Or like sitting in the living room like, oh, they told me buy now. Like the market is where it's at.
Like I started with a cooler and a lawn chair. Those are the only two possessions.
The inflatable couches.
The bachelor pad. The typical bachelor pad.
It's fine. No groceries in the refrigerator.
Right.
I first started dating
a
Ryan,
2-liter
and he's
Coke.
like, do you go to the grocery store? I'm like, look, we're just surviving around here, okay?
Oh, no, you're 100% right. We never say no, Mariela. We always give you a plan. All right?
Yeah.
Maybe not right now. If your credit's toast, we'll send you to somebody who can fix it. We can do some light credit repair. And I have a lot. I'm in a real successful networking group, and a lot of those people are not ready to buy, but I'll leave them with a plan. And I tell them, you need to save $10,000, and you need to pay this off, and and get your score to here, and then you'll be ready to go. So we always try to give you a plan to get to where you want to go. And if you're thinking about it early, I love those people. Mm-hmm. The ones that just show up and want to buy today and they've already got a contract, those are the ones that scare me. I like those people too.
Yeah, but something's bound to go wrong later on down the road if you're that prepared.
Right.
Oh, yeah.
Come to me a little broken, okay?
Let me fix you a little bit.
Partner up together and then make sure it goes smoothly after that. Not like I'm ready to go. No, something's bound to come out of the woodworks. Yeah.
Like a tax lien. Oh, I forgot about that.
Or that's not mine. Just let us know.
Right. Yeah. Look, we're gonna find out.
I don't know what that lien is. I've never seen that. We've never had that. We will find out.
Well, I need your tax returns. Well, I haven't filed since 2021. Well, that could be a problem. There's things that you need to address. And mortgages aren't hard, but it's a lot of little details.
Yes.
And one little teeny one on the front end is a big problem at the end.
Yeah. We will not stop emphasizing the fact that you need experts. And we know people. We're experts ourselves in our realms and our professions, but we also know other people. We have credit repair individuals. If there is a lien on it, we have experts as well. So if you don't have your contacts, to talk to us is free. That's what I tell people all the time.
100%.
My phone call, all free of charge. And that includes for my team here. So please call us, text us, send us a quick email, and we will reroute you to someone that we trust ourselves.
Absolutely. I love that.
I've been doing it a long time. If I don't...
Earlier you said 30 years ago, and I'm thinking, wait, are you over 30?
No, I'm not over 30 in the business.
You're not over 30 in the business.
No. I started in 96.
Okay.
But I was an underwriter for like 5 years, so...
I know when you asked him the underwriter question, I was like, oh, this is right up his wheelhouse. This is where he started.
Originating's more fun,
Yeah.
See, with more reason, then you're going to see what red flags are in someone's applications to be able to say, hey, I know this is going to get called out, so let's fix this before we go to underwriting, because underwriting will... Yep. It's tough to get out of underwriting.
And it's better with underwriting if you tell them this is what you're doing and this is why you're doing it. If they discover it themselves, then it's like, they've busted you, right?
Agreed.
And that's then you're guilty until you can prove that you're innocent, right? So
right, and it makes it twice as hard because now you have to have letters and with wet signatures and hey, we need this notarized, and it gets more complicated.
Rocket Mortgage just made an offer to buy Redfin. Did y'all hear that?
Really?
And that could change the whole landscape of everything, with their money app, and they're trying to be a one-stop shop for everything. So who knows how it's going to work or if it's going to get approved. And I think they're the number 2 lender behind Union Home Mortgage or whatever. But, and it just shows you how many players there are because they don't even have like a 5% share of the market. Rocket did. And they're number 2.
Yep.
I think number 1 is 7.5 or something.
I always think
that's
crazy,
a new
the market share where everybody really does have a little piece of the pie, and even the best of the best only have 10% maybe
That's wild.
But the
Wild.
technology
Too
part
many
of that,
companies.
you know,
Right.
that's what's going on in the industry right now.
Yep.
So it'll be interesting to see. Again, I don't, you know, you still need a human somewhere. And you know, I'm old school and old fashioned, so I think talking to a human is the best way to start the process.
See, and this is why I was watching on social media on Instagram where they announced that Portugal's AI system made $100 million in sales last year, and it was just AI generated. I'm like, man, I understand it, the logic of how maybe that occurred, because there's two sides of the coin of, you know, you have people that are like, I don't want to pay a realtor 3%, you know, whatever. And it's like, because you're getting an expert advice on that. And so it's interesting not to see another factor coming in. For me personally, I'm also old school. I'm like, I need to ask questions. I need to see, you know, what am I getting into? Because this is not a $2,000 investment. We're talking six figures. Like, I'm going to make sure like everything is where it needs to be. And I'm going to ask 1,000 questions, because that's what your real estate agent is for, is they're providing you the service because they're the expert. So ask them any questions. There are no dumb questions in real estate. I tell that to 1,000 people every day.
And it's still a relationship business.
Yeah.
100%.
I mean, I still want to call Ben and say, hey, Ben, what's going on? How's Landry? How's Zach? What's going on in life? And with the AI and the computer screen and all the tech, you lose sight of that. So people still, I mean, COVID was the worst when you had little to zero social interaction. I remember coming out of COVID and being like, I don't even know how to talk to people.
Right.
What I thought I was socially
I
aware.
couldn't remember
and like,
where the real estate offices were.
Right.
It's
Yeah.
like,
How do you
where am I
drive
going?
again?
But we have that normalcy back, and it's
Yeah.
like, no, we're friends. It's a relationship business,
yeah.
trust. And don't you want to support the local people that, you know, feed your family at the end of the day? We're all doing this to be employed and to provide for our families.
And
so.
realtors are some of the hardest working people out there.
Absolutely.
You know,
Seriously.
and you know the basics of real estate: location. They can tell you that it's located near good schools, good amenities, all those things, and things that you might not want to live by or whatever.
Yeah, AI won't know any of
Yeah,
that.
AI
They're
won't,
not
right,
around us.
Yeah, you know, it's like following ways here. I'm like, why is it taking me this way? You know.
What's like going to your local coffee shop and you're talking about like what's happening in their neighborhood, for example. You know, that's how real estate agents work. You know, they know the nitty gritty. They know
The community.
Yeah, so
Sometimes they know listings before they're in MLS, and you know, I've seen that happen.
True.
People buy houses that never was even listed because the realtor, you know, had a relationship with somebody.
Exactly. That's a great point. That's a
You
great
know.
point. Knowing the inn, if you're looking for a 3-bedroom, 2-bathroom in, you know, Meridiana, then your real estate professional probably will know somebody that has one coming up in a couple weeks. I love that.
Yeah.
point.
Maybe they sold them the house, and they're
Just
you
a
know,
few reasons why you should use a real estate professional.
Yes.
Yeah.
The most jacked up transactions by far
Or the ones without them.
are the ones without real estate agents.
I would agree.
I mean, it is not. I know how to write a contract, but I'm not licensed to do so, and I won't. You know, so I mean, I'll help you with a pointer here and there, but I'm not going to write a sales contract for you. And those transactions, you know, there's too many moving parts to a real estate transaction: a loan, a title, an appraisal, a survey, the purchase, the
inspection,
negotiations, inspections. I mean, you can start listing all the people involved. It's probably 15 or 20
Yeah.
Yeah.
by the time it's, you know, it's finished. So you need people that do it every day, that, you know, that know the ropes.
This is a team effort. This is what this really.
Yes.
This is why we exist. That's why we have a partnership.
Right. And
also
working with people like this, it's fun. You know, they'll steer you in the right direction, and you'll have a good time.
Yeah, and that's why it's important. And I know we talk about real estate agents, but that's why it's important to also interview your real estate agents. You know, I always say all the time, not every real estate agent was created the same. They're all very different in their, you know, their experiences, what they know, their knowledge base, their negotiation skills. Like, so always interview and vet your real estate agent, you know, to help you buy the six-figure
Yes.
asset.
Negotiation skills are that's
Prime.
a huge one. If
And
you do
just
not
a
have
fit for you,
somebody,
you know.
Yeah. Someone that's going to listen to you, you
Right,
know, and not
right, you know.
show you all these other houses that you're like, I didn't ask for that, you know.
And if you want your house to be $500,000, a real estate agent that isn't going to overprice it just because you want it $500,000.
Right.
Yes.
A good agent's going to tell you what it's worth and what it'll sell at.
Yeah, and deliver that information to where you do price it maybe at $450 instead of $500 and not feel bad. But
yeah, because
anyways.
the moment that a property goes stale, it gets stigmatized.
Yep.
And that is the worst part
Yep.
for a house. And whether that's on the rental side or, you know, on the selling side. So,
Yep.
super important to get that insider information and guidance from your agent.
So, Ben, is there anything showing up today that you're like, ooh, I'm eager to talk about this, or I feel like the consumer and the real estate agents need to know this? Anything that we left out? I know we talked about a lot of information today. You can look at your notes if you
other
need
than
to.
there's no, the products are pretty much the same. Underwriting's been tough for a long time now, so I don't think it's gotten that much tighter. I mean, if delinquencies are going up, you will see underwriting standards tighten down. But so far, we're still getting the same DTIs approved and all that. But I'm excited for this year. We have whittled down the field. I would say that you're dealing, your likelihood of running into a bad lender or a bad realtor is lower now because those players have, the market's been tough for going on 3 years probably about, if you weren't doing what you're supposed to be doing, you didn't make it in this business over the last few years. And this is normal. Real estate cycles. So I would say you're dealing with a lot, on average, good professionals. And I love competing against people that know what they're doing all day long. The ones that'll tell you rates are 2 are lying, and they're not professional. When they're 6. So that part of it is nice. And like I said, people are just acclimated to this is the market. I think the new administration, I personally think there's going to be some good things down the road, but it's not going to happen overnight. Some things have to take effect. I just hope we can get some more inventory. Builders are a lot of competition for guys like me right now. We're fighting it out with against new builds, and it's harder to get the financing on those for a loan officer versus if you buy an existing home. But sometimes we do. But the builders are doing well right now. But product wise, it's still 30-year fixed rate money, somewhere in the 6s. Doing a few 15 years, and I think we're going to see a lot more refinances this year because I think, economically, the government numbers versus what's really happening, I always think there's a lag. Mm-hmm. And I think the economy's in worse shape than, we're getting from the Consumer Price Index and the Producer Price Index and the Bureau of Labor Statistics that, all these numbers that we watch that affect interest rates, they're starting to catch up. And they're year over year look back. So the numbers we're replacing are higher, and so numbers should be going our way from what I've seen to maybe get some interest rate relief. And I know I said at the beginning that I think there's likely to go up as they are down, but I still think we've got a chance to have a good summer with rates right around 6.5.
Okay.
Well, going back to the builders, you're saying that because of how their incentives are of them providing, whatever programs that they have, because they can customize because
they can customize. We sell forward commitments to builders. Like I can do that. Like, so if a builder wants to buy $5 million at 4.99, they pay a big discount for that. But then they can advertise, hey, I can get you this house at 4.99 if they use me, if I sold them the commitment. But they go out and buy those blocks of money, just like auto dealers do and everybody else, and then they can offer those low rates to move homes. And you, as a consumer, you could buy down a rate that far, but it would probably the fees would be so high that it would be a high cost loan, and we can't do those. Right? Okay. You can buy down a rate yourself, but you can't buy it down to that level, and a builder can. And then they can advertise, in their subdivision, whatever that 499 is, 30-year fixed, and the rest of us, who are getting our money, in real time. We didn't buy it, beforehand or 6.5. So the builders are doing that, and it varies with builders. Some don't care who the lender is, and they'll let you use their incentives. But the ones who have their own mortgage companies, usually to get most of the incentives, maybe not all, but most of them, you've got to use their mortgage company. But it's always a good idea. I've got one working for a good friend right now, and I told her, look, if they're better, I'll tell you. but shop them with me, even if I'm just leveraged to get what you need out of them, because sometimes I can beat them. Sometimes it's like, oh, you're paying so much for this, I can do that or whatever. So it's always good to have two opinions on that stuff. But again, I'm excited for the year. The weather's getting good. Stuff's starting to grow. The fish are biting.
I was gonna say, do you fish in the March?
Yeah.
Okay.
I caught a limit of trout Saturday, and it was so foggy when I left I couldn't see 50 yards.
Do you have cell phone service out there?
Yeah, you do have
Consumers.
cell phone service.
We got to make sure he's going to answer your call. Okay.
Yeah, I had a flashlight.
Flashlight? I can't. Well, it's been fun as always.
It's great to be y'all's guest. Thank you so much for having me again. Two of my favorite professionals sitting right here across from me. They rock. These ladies know what they're doing, and they work really hard.
Thank you.
And I appreciate the opportunity just to come hang out with y'all.
We'll
At the end of the day, I do this because it is a blast watching somebody walk out of a closing booth with their set of keys.
Absolutely.
That's right.
And that's the people are the best part of the deal.
Yep.
By far. And I'm a nerd enough to like playing with the numbers and all that, but there's nothing that replaces the smile of a first-time home buyer, or second or third, especially the first-time home buyers.
Goals being achieved.
Yes.
I love that.
I love it. Well, thank you so much again, Ben, for being here and being our guest again. We will be having you again to continue giving us market updates.
I feel like I talk too much, Mary.
No, we love it that you talk too much.
Look,
we love it.
The market is consistently changing. It's always constant. So we want the latest and greatest information. So thank you so much for that, Ben. And thank you so much for watching us. My name is Mariela Aguirre with Terra Residential Services.
And I am Kayla Ewald with First American Title. And again, this was Ben Sinclair with Highlands Residential Mortgage. We'll see you next month.
Bye.
Bye.